So joining me now with more is Katie Hubbard, EVP of Capital Markets at Walton Global. Katie, great to see you this morning, joining us from Denver. What are you seeing in the market right now?
Yeah, Kristen, thanks so much for having me. What we're seeing is that summer has been plagued by just uncertainty and just overall lack of affordability. So we're seeing increased inventory, but buyer reluctance is just keeping people on the sidelines. So in existing home sales, we had the lowest May we've had in 16 years. And the sellers are outnumbering the buyers by 34%. And we have increased inventory up 20% in existing homes. So people have more choices, but with rates staying elevated, they're just not making a move. And so people are just really stuck in their homes. They're wanting to sell, but there are not buyers to match that.
Interesting. So this buyer pullback that you referenced, Katie, do you anticipate that those factors could persist?
Absolutely. I mean, we're not really seeing the 30-year rate go down anytime soon. And so in existing home sales, it is difficult if you're wanting to purchase a home and 6.5% to 7% rates not working. What buyers can do, though, is they can go to new home builds. And the new home builds, that is really looking to be more resilient this summer, where home builders are buying down mortgage rates. We're hearing even as low from some of our clients, 3.9%. You can lock in a 30-year fixed.
Wow. Okay, so the new home market, how is that looking? Any more resilient?
It definitely is. So right now, sales are actually down 18% year over year in the new home market, but it's up 8% if you're looking pre-pandemic 2012 to 2019. And the average sale per community is 2.5 homes per community, and we're typically at 2.7, so just slightly off. However, we are starting to see a rising inventory. Inventory for unsold build homes is up 44%. So right now, typically you're at 1.8 homes unsold per community, and we're at 2.6. So from a buyer's perspective, you can go into a new home community and really negotiate a great deal because the home builders are wanting to get that inventory off their books. And because of that, they're starting to start less homes, and they're really being cautious of not wanting to sit on too much inventory going forward.
How confident are home builders in this market?
I mean, the home builder confidence has dropped to 32, but that is across over 400 builders. And so it definitely varies widely. If you are a national public builder and you have pre-pandemic margins, Lennar just reported 17.8 gross margins, you have the ability to buy down mortgage rates, to offer incentives, to discount the home prices, to get people into the homes. But if you're Bob the builder and you're not able to compete with the national builders across the street, offer the incentives, secure capital, lock in the land, and scale your operations, home builder sentiment for you is probably hitting rock bottom, and you're thinking about throwing in the keys.
Yeah. What does this tell us about where home prices are today and where they might be going, Katie?
Yeah, the Case-Shiller numbers just came out, and nationally, home prices are still up 2.7% over this time last year. However, that is dramatically cooling. The price appreciation is slowing, so we're starting to see home prices come down with that elevated inventory. The 10-city composite is up 4.1%. You're still seeing big gains in cities like New York was up 7.9%, Chicago 6%, even Detroit is up 5%. People going there for affordability. But some places that have excess supply, like Tampa, it's down 2.2%. So we are starting to see home prices come down. We need, rates to come down. We really just need more consumer confidence, where 1 in 4 people are reporting they're delaying any major purchases because they're just uncertain right now with the economy.
Yeah, housing starts, existing home sales, I'm sure data points that you're looking at as well. In terms of a balance in the market, what can you share there, Katie?
Well, it's just interesting that now for the first time, it's actually 3% cheaper to purchase a new home than it is an existing home. And like you said, we're starting to see an interesting demographic shift of Gen Zers. So this is anybody under 28 years old. They're making up 1 in 4 mortgage applications. So the younger generation, they're more optimistic. They know that the path to home ownership is going to help them create wealth. They also are typically not going into the office 5 days a week. And so they're driving, farther to qualify to buy a cheaper home, moving to secondary and tertiary cities where they can work from home. They've figured out how to make money online, YouTubers, influencers. So it's interesting to see that demographic wanting to purchase homes.
Long term, how is it looking? Very quickly, in just about 15 seconds, Katie, we'll leave it there.
Yeah, long-term, strong fundamentals for housing. The demand is still there. So 26 to 28, we're going to see the fundamentals return to normalcy, and we just need mortgage rates to settle down a little bit.
All right, Katie Hubbard, EVP of Capital Markets at Walton Global. Katie, thank you.
Thanks for having me.
Yep.